Bitcoin is currently trading below $29,000, losing roughly 5% in the past 30 days. Well, joining us now to discuss how the crypto markets performed in July is CoinDesk Indices Head of Research, Todd Groth. Welcome, Todd.
Thanks for having me.
Glad to have you back. So, of course, you say that the main catalyst for the month was actually Ripple's partial court victory against the SEC. Can you unpack that for us? And, well, I guess how did it do relative to, I don't know, the ETF situation that happened in June?
Sure. Yeah. So I think what we had in July was a reversal of the Bitcoin dominance we saw from all the positive headlines in June, most notably the BlackRock ETF filing. And really, while the Ripple outcome was it was partially positive, it was still deemed a security to institutional investors because the contract involved in the initial sale of Ripple. What it basically did was it allowed for a lot of the altcoins to catch up with where Bitcoin was and even Ethereum relative to the smaller cap universe. And so with that, as you mentioned, Bitcoin down 5%, Ethereum down 3% on the month. But the broad CMI, which is Bitcoin, Ethereum market cap weighted, so those are large tokens within CMI, CMI was only down about 1%. And that was really driven by computing sector, DeFi, and digitization, which have the smaller tokens relative to currency and smart contract platform where Bitcoin and Ethereum reside.
So that analysis makes a lot of sense. I'm just curious, like in your observation, though, my personal observation is that whatever the SEC does doesn't seem to affect Bitcoin that much. Now, what you're talking about a little bit is different because it's like Ripple and altcoins, but I'm just curious if you share that view because sometimes like even when the SEC, and the Coinbase and the Binance lawsuits, they named all these different altcoins. Like, I mean, I guess it affected those coins, yes, but it doesn't really seem to affect Bitcoin that much. I mean, do you agree with that statement?
Absolutely. I mean, you even look at what came out with Coinbase, the dialogue between Coinbase and the SEC. It was delist everything except for Bitcoin. And I think Bitcoin's more global, more decentralized. In that sense, when these individual targeted investigations and actions occur, it's very specific towards tokens outside of Bitcoin, and to some extent Ethereum. I think Ethereum still. There could be a tail case where the SEC goes after Ethereum as security, but it seems it's always an ex-Bitcoin event. Exactly to your point.
And if you could just talk to us a little bit about the broader macro factors, particularly the interest in central banks, interest rates, what's been going on, what have you seen?
Sure. Yeah. So we had the July FOMC, which 25 bips as consensus. There was a little bit more hawkish communication towards the end. It sounded like we're going to have higher rates for a little bit longer. I think the committees are still split between the doves and the hawks, but it seemed on the margin, it was a little bit more of a hawkish rhetoric, just to make sure that the markets wouldn't get overly dovish take from it. And then last week, I think what was notable was the Bank of Japan adjusting their yield curve control. To allow for the 10-year JGB to stay within their target, but then allow for rates up to 1%. So effectively reinflating a lot of yield into the JGB curve. Now it's still negative. It's still negative real yield if inflation is 2%. But that's meaningful because that is of the different central bank programs, the Bank of Japan is furthest out in terms of just of yield suppression across the curve. So that was notable to see the BOJ relinquish some of the control that they've had on that market. And whenever we see rising rates, and we've seen this globally across the US, Europe, and the Japan curve, whenever we have rising nominal and real yields, that's generally negative for crypto, as crypto is viewed as an alternative better in a zero interest rate environment. But that negative macro effect is offset by what we're seeing is continued US dollar weakness. And more broadly, just still positive risk sentiment for both equities and credit within the US.
All right. Well, thanks so much for that, Todd. That was CoinDesk Indices Head of Research, Todd Groth.